I believe the long-term value of Bitcoin will be based off of a bunch of factors, including what the government, the CBO, projects what deficit, debt spending, etc. will be by 2054 for the next 30 years. And based off of this, by 2030, I've mapped out Bitcoin being worth $21 trillion or about $1 million per Bitcoin. That's about an 8 or 9 times return from here. Round numbers, call it a 10 time. So if MicroStrategy and other companies like that could do 2 times or 3 times or 4 times, as I've just shown you why, instead of a 10 times return like Bitcoin, that could be a 30 or 40 times return for companies like this. That's what we're calling intelligent leverage. Bitcoin at 2040, based off of the debt, the deficit spending all continue to expand. All of these assets will continue to expand, and I believe Bitcoin will reach about a $289 trillion market cap, or about $14 million per Bitcoin. And again, these companies could 2, 3, or 5x that.
Mark Moss points out that the past 5 years have been a brutal reality check for traditional assets. From August 2020 to August 2025, bonds are underwater, real estate has barely budged, gold is up only about 10%, and the S&P has managed 14%. Even the so-called Magnificent Seven stocks Apple, Microsoft, Tesla, and the rest delivered just 27% over that stretch. In contrast, Bitcoin has averaged 58% per year, stacking up a staggering 885% cumulative gain. And then there's MicroStrategy, which dwarfed even Bitcoin with nearly 100% annual growth, translating into more than 3,000% in 5 years. So how can a stock tied to Bitcoin outperform the underlying asset itself? Moss explains it's not luck. Companies like MicroStrategy function as Bitcoin treasury companies. They play across 3 different markets: Bitcoin equity and debt that don't move in sync. By borrowing in credit markets and raising equity capital, they've been able to scoop up additional Bitcoin at opportune times. That creates a form of financial leverage where $1 of equity ends up representing more than $1 worth of Bitcoin. Over a decade, this method compounds dramatically. Moss lays it out 1.3x, 1.9x, even 2.8x the Bitcoin exposure compared to simply buying BTC directly. It's financial engineering, not a Ponzi scheme, and it makes MicroStrategy's stock behave like amplified Bitcoin. For investors, that means higher upside when Bitcoin runs, but also sharper drawdowns when it falls, a leveraged play on the hardest asset of the digital age. If you found value in this breakdown, please hit the like button, subscribe, and share it with other investors who are paying attention. We're here to keep bringing you sharp analysis and voices that actually understand what's unfolding. Thanks for watching.
So if we take a look at some of the biggest asset categories that we have, the performance over the last 5 years, from August of 2020 to August of 2025, what we can see is that bonds are down 4%, of course, wah wah. The 60-40 portfolio split is dead. Real estate's done about 6% during that time. Gold 10%, S&P 500 about 14%. Excuse me, my voice is a little bit off, been a little bit under the weather. Magnificent 7 has done about 27%, the Mag 7, not the S&P 500, right? It's greatly, almost doubled the performance there. But then the Mag 7's done 27%, and Bitcoin has about doubled that, 58% over that time. This is annually, 58% per year. And even better than in Bitcoin is MicroStrategy. It's done about 100% per year, 3,000% cumulatively. Bitcoin 885% cumulatively versus 332 S&P 500 or Mag 7. All right, so you can see how these different assets over 5 years have done different. And so Bitcoin, although it's completely crushed every other asset, MicroStrategy has actually doubled it, or 2x. Leverage, or what we're calling amplified. Now, I'm not just cherry picking data. Let's look at the last year. All right, so over the same time frame, so August of last year to August of this year, we can see about the same. Bonds 0%, real estate 6%, S&P 500 17%. The Mag 7 about double that. We can see gold a little bit better. Bitcoin has about doubled that, 74% in the last 12 months. And again, MicroStrategy almost doubling the performance of Bitcoin. 2x, not leveraged, but amplified Bitcoin. Now, a lot of people want to know, why buy MicroStrategy and not just buy an ETF? Well, when you buy an ETF, you have exposure to Bitcoin. One Bitcoin is one Bitcoin. And as I showed you, one Bitcoin is outperforming every other asset. Congratulations, it's a good job. Same buying physical Bitcoin. Well, of course it's digital. But if we buy a Bitcoin treasury company like Strategy or like MetaPlanet or any of the other ones out there, they're adding leverage, intelligent leverage. I'm going to break this down for you in a second. They're adding leverage, which allows them to get that leverage exposure, which allows us to receive the benefits of the amplified Bitcoin, but without having the risk. Now, how do they do this? How is it intelligent and how is it not a Ponzi scheme? Don't worry, we're going to pull back the curtains and I'm going to show you exactly what's going on. Because you should never buy something unless you understand what it is. What is it? What are they doing? Why do I expect it to go higher? Over what time frame? What are the risks? How long am I going to hold it? All of these things. And if you don't understand what I'm about to show you, you'll never make a good decision based off this. You'll be underexposed, overexposed, etc. Okay, so the first thing is we have to understand what these companies are doing, these Bitcoin treasury companies like Strategy, like MetaPlanet, etc. What they're doing is they're using arbitrage. They're leveraging one market against another market. It's like buying on Alibaba or Temu or whatever and then selling on Amazon, right? You leverage the China market, which is super cheap, and you sell in the US market, which is more expensive. And what really is going on here is we have a digital transformation and we're digitizing money. That's what Bitcoin is doing. Now, we know that digital transformation, digitizing money, the dematerialization of money will always move faster than physical, productive physical. So this would be like brick and mortar businesses. This is the S&P 500. And we know that businesses will always do better than debt and credit. So these are three different markets, debt and credit, physical, productive, and then digital. Three different markets that we can arbitrage against each other because they're moving at different speeds. And really what we're arbitraging, here's the big thing, the unlimited treasury market, the unlimited fiat currency that will always continue to be printed and expanded against a scarce asset like Bitcoin. That's ultimately what the arbitrage is, but let me show you what I'm talking about. So, if we look at MicroStrategy, now what they're trying to do is increase the amount of Bitcoin exposure you have for one share of stock. So if we take a look at this, this is 199,000 Satoshis, which are a fragment of a Bitcoin, per share of stock. Now, if they use no leverage, then what you'll see is the baseline and the leverage never changes. So one Bitcoin is one Bitcoin is one Bitcoin is one Bitcoin, a Bitcoin factor of one. This would be similar to buying an ETF. I keep the same amount of Bitcoin exposure over a 10-year period. However, if we can start adding some intelligent leverage, don't worry, I'm going to show you what the intelligent leverage is. This is using a baseline or a 10% leverage number. What we can see is that over time, this green is the amount of Bitcoin exposure I have, and over time we can see that it goes higher, higher, and higher. So I went from 199,000 Satoshi per share of stock to, in this example, 267,000 Satoshis per share of stock. So the amount of Bitcoin I'm exposed to per share of stock went up over time. This would be at a 30% Bitcoin annual run rate and a 10% leverage rate. That's a Bitcoin factor of 1.3. All right, let's increase the leverage a little bit more so we can see why is it going up faster? Why is it amplified Bitcoin? Okay, so what we can see here, this is 20% leverage. Again, we start with the same 199,000 Satoshis, and over time, over 10 years, at 20% leverage, we end up with 376,000. Not quite double, but almost. This is a 1.9 Bitcoin factor. Amplified Bitcoin. All right, let's keep going. One more example just to drive this point home so you can see the difference of buying Bitcoin, buying a Bitcoin ETF, or buying a Bitcoin treasury company like Strategy or MetaPlanet or some of the other ones. Okay, so now this is assuming a 30% leverage. Don't worry, we're going to get to these leverage ratios and where this comes from and what this all means. But now let's assume a 30% leverage ratio. So MicroStrategy is doing this. Think of it like I'm buying a dividend paying stock, but rather than paying me the dividend is being paid in Bitcoin, but instead of them paying it to me, they're reinvesting it for me. Think about it like that, compounding the returns. So at a 30% baseline or leverage, we can see we start with, again, the 199,000 Satoshis, and over 10 years, we end up with 555,000. So more than double the amount of Bitcoin, 2 times the performance. Are you starting to see the numbers here? This is a 2.8 times Bitcoin factor. Now imagine going out to 20 years and 30 years and et cetera, and you can start to understand the outperformance that's here.
Mark Moss argues that MicroStrategy isn't just a company holding Bitcoin, it's helping build an entirely new financial system. Instead of relying on bonds, treasuries, or fixed income products that yield 4 to 5%, these Bitcoin treasury firms are offering 8 to 12% returns layered on top of direct Bitcoin exposure. In effect, they're creating a Bitcoin-denominated yield curve, something that could eventually rival traditional credit markets. Looking ahead, Moss lays out why this matters. If Bitcoin climbs to $1 million per coin by 2030, a $21 trillion market cap, that's a tenfold move from today. With MicroStrategy's leverage model, that exposure could amplify into 30-40x returns. Stretch the timeline further, and the numbers get even more staggering. By 2040, if Bitcoin approaches $14 million per coin, a nearly $289 trillion market, amplification could push the upside to 50x or beyond. This is why MicroStrategy trades at such a steep premium compared to Bitcoin itself. Investors aren't just buying Bitcoin in corporate form, they're buying amplified Bitcoin exposure that compounds through careful use of debt equity raises and balance sheet engineering. For anyone who believes in Bitcoin's long-term trajectory, Moss says this makes MicroStrategy more than a proxy. It's a multiplier. Let's get back to the interview.
This takes a look at the Bitcoin factor, remember, the return, the ratio, and this assumes that there's an 8% dividend rate and a 10-year duration, so we're looking over a 10-year period. So on this column, this is looking at the Bitcoin annual return rate, the ARR. So we have to guess. Do we think Bitcoin will return 10%, 20%, 50%? It's been averaging about a 50 to 60% per year. So what will it continue? Well, let's just say 30%. So we'll call it 30%. And then what leverage? How much leverage will they apply? And we'll get more to the leverage in a second. How much leverage do they apply? Well, if we could assume a 30% run rate, annual run rate over the next 10 years, again, we're at about double that now. If we could assume that over the next 10 years, and they got a 30% leverage, that would give them a 2.8 times factor, right? So this is like the multiple that they'd be running at. Now, what if Bitcoin does better? Like I said, it's doing 50% now, and what if they got to 40%? Then it could be 9 times what Bitcoin does. You see how powerful this leverage is. What if it was 13 times Bitcoin? So it depends on what the return rate of Bitcoin will be, and I'm going to show you more about some projections of what that return rate will be in a minute, or what the leverage ratio will be. You see some examples there. A couple other ways they broke it down. We can take a look at this. What this is showing us is, again, the same. The annual run rate, we have to guess, is it going to be 30% again? And this is what their dividend rate is. So when they're taking on this money, this debt, they're creating products, financial products, and they're basically thin slicing it out, and they're owing people money, a coupon rate. I'm going to break it down in a second. So do they pay 8%, 6%, 12%? So again, if we assume that they're paying, let's say, a blended rate of 7%, maybe 6%, maybe 5%, that would give them a 4 times factor. All right, this is the amplified leverage, the intelligent leverage that we're talking about. One more sheet just to drive it home, and then we'll get more into how they're actually doing this. Okay, this is again assuming a 30% annual run rate over a 10-year period. Now we have the leverage here. So let's say we get up to like a 40% leverage, and this is the dividend rate they have to pay. So they're only paying 5% at a 40%, and here we are at a 5 times. So you can see that depending on how we look at this, depending on what we think the leverage ratio will be or what annual return rate will be, it's somewhere between maybe a 3 to 5 times seems about the average, the amount of amplification, the factor rate that MicroStrategy and Bitcoin treasury companies are able to produce. Okay, so what is this? What is the product? What is the product that they're providing that gives them this intelligent leverage, this amplified Bitcoin? Well, let's think about this. What they're doing is they're taking Bitcoin. It's a commodity. It's a very volatile commodity that goes up and down. However, it's very explosive to the upside. But it's a commodity, so not everyone can buy a commodity. Pension funds, insurance funds, governments, they can't buy the commodities, right? And so a lot of people also maybe can't handle the volatility, right? So I can't buy it through my 401k or through my pension plan. Also, I'm 78 years old. I'm on fixed income. I can't hold for the 4 or 5 years of volatility either. So what they're doing is they're taking Bitcoin and they're thin slicing it. So let's say that we take Bitcoin like this and we can thin slice it and chop it up, and we'll say, hey, what if we give you 80% of the upside of the Bitcoin price, but we give you no downside to the price. And on top of it, we'll pay you, let's say, 8% to hold that. Or what if they say, here, we're going to give you 12% return guaranteed forever in perpetuity. So we'll take part of Bitcoin and we'll start slicing it up and give it to you in products, and we'll wait for that. Here's what this looks like. Again, this is from MicroStrategy, or I should say strategies. I use the names interchangeably. Sometimes I forget, but mostly just so everybody else knows what I'm talking about, because the name change has been recent. But strategy enables a wide variety of securities based on Bitcoin, which is a commodity, right? So this is now, everybody can get access to this. So we take Bitcoin here, this raw asset, and then we create different things, a higher volatility leverage play. So this is the stock, MicroStrategy, MSTR, right? These would be options on it. Here's the stock down here, right? And then what we can do is we can create these products down here where we've thin sliced it, and we pay, like here, we pay 8% for people to hold this one. We pay 9% for people to hold this one. We pay 12% or 10% for them to hold these products. So we take Bitcoin, we thin slice it, we create securities around it, and we offer it to different people for different reasons. Again, if I'm 78 years old and I need income to pay my monthly bills, I can't just buy Bitcoin and hodl. I can't handle the volatility. I need income, and that's exactly what these products are. So what happens is, over time, these Bitcoin treasury companies like Strategy or Pioneering are building out a yield curve. So we have over here, long term, this would be like a US Treasury bond. So instead of buying US Treasury bonds, which is like, maybe the government will pay me, maybe they won't. Most likely they probably will, but with devalued dollars, but I'm only getting 4% or 5%. How about we pay you 10% and we give you upside potential on Bitcoin, but with no downside? That sounds pretty good. All the way over here, we have junk bonds. And then even better than junk bonds, over here we have like loans, and this is where Stretch, one of the other products, STRC, is here, and they're just going to pay you, 10% in perpetuity. And it's fixed, so you don't lose money. It's sort of like a money market account. And so they're starting to create products up and down these, and each one of them allows them to get this intelligent leverage, this amplified Bitcoin that they're going for. This is how they're able to deliver that. I believe the long-term value as Bitcoin will be based off of a bunch of factors, including what the government, the CBO, projects what deficit, debt spending, et cetera, will be by 2054 for the next 30 years. And based off of this, by 2030, I've mapped out Bitcoin being worth $21 trillion, or about $1 million per Bitcoin. That's about an 8 or 9 times return from here. Round numbers, call it a 10 time. So if MicroStrategy and other companies like that could do 2 times or 3 times or 4 times, as I've just shown you why, instead of a 10 times return like Bitcoin, that could be a 30 or 40 times return for companies like this. That's what we're calling intelligent leverage. Now, if we go out a little bit further, here's another projection that puts Bitcoin at 2040, based off of the debt, the deficit spending, all continue to expand. All of these assets will continue to expand, and I believe Bitcoin will reach about a $289 trillion market cap, or about $14 million per Bitcoin. And again, these companies could 2, 3, or 5x that. So you can start to see very quickly why these companies are trading for such higher valuations.
What's remarkable here is how one company managed to turn a simple asset bet into a structural shift in finance. MicroStrategy isn't just holding Bitcoin, it has created a model where corporate balance sheets act as amplifiers, pulling capital from credit markets and equity investors to build a position that grows faster than the underlying coin itself. That's why its stock doesn't just track Bitcoin, it exaggerates its movements. When Bitcoin rises, MicroStrategy soars even higher. When Bitcoin dips, the pain cuts deeper. It's leverage, but not in the reckless sense. It's calculated, deliberate, and designed to compound across multiple cycles. Looking further out, this approach hints at something bigger than one company's strategy. If more firms adopt this kind of structure, the traditional role of bonds and other fixed-income instruments could face real competition from Bitcoin-based yield systems. That would mean financial markets no longer revolve solely around dollars, treasuries, or central banks, but also around decentralized digital reserves. The real issue to consider is whether MicroStrategy's blueprint marks the early stages of a wider migration where corporations increasingly sidestep legacy credit systems in favor of Bitcoin-centered models that reshape the very foundations of investing. So stay tuned. If you're into real, data-backed takes on the financial system, hit like and subscribe so you don't miss the weekly updates. Thank you for the support, and I hope you enjoy the video.